Have you ever faced a financial emergency and needed some cash fast? Maybe your car broke down or your rent was due. Maybe you thought about getting a payday loan, a short-term, high-interest loan that promises to tide you over until your next paycheck. But before you sign that contract, you should know the truth about payday loans and how they can trap you in a cycle of debt that is hard to escape. I'm going to show you how to avoid falling into the payday loan trap and find better alternatives for your financial needs. Here are some of the disadvantages of payday loans and how to avoid them. 1. Payday loans are very expensive. According to Investopedia, some lenders charge interest rates as high as 400% or more, which means you could end up paying back much more than you borrowed. For example, if you borrow $500 for 2 weeks at a 400% annual percentage rate, APR, you would have to pay back $574. That's $74 in interest for just 2 weeks. If you can't pay back the loan on time, you may have to pay additional fees or roll over the loan, which means you will pay even more interest and fees. 2. Payday loans are predatory. Some lenders target people who have low incomes, poor credit, or financial difficulties and take advantage of their desperation. They may not check your ability to repay the loan, or they may hide the true cost and terms of the loan in fine print. They may also use aggressive or unethical collection practices if you fail to pay back the loan, such as harassing phone calls, threats, or lawsuits. 3. Payday loans can hurt your credit score. If you miss a payment or default on the loan, the lender may report it to the credit bureaus, which will lower your credit score. A low credit score can make it harder for you to get approved for other loans, credit cards, or mortgages in the future. It can also affect your interest rates, insurance premiums, and employment opportunities. So how can you avoid falling into the payday loan trap? Here are some alternatives and strategies that can help you. 1. Build an emergency fund. One of the best ways to avoid payday loans is to have some savings that you can use in case of an unexpected expense or income loss. Ideally, you should aim to save at least 3 to 6 months' worth of living expenses, but even a small amount can make a difference. You can start by setting a realistic budget and tracking your spending, and then finding ways to cut expenses or increase your income. You can also automate your savings by setting up a direct deposit or a transfer from your checking account to your savings account every month. 2. Another option is to ask for help from your family, friends, or community. You may be able to borrow money from them at a low or no interest rate, or get a gift or a grant. You can also look for local resources that can provide you with financial assistance, such as churches, charities, or social services. However, you should be careful not to abuse this option and always repay your debts or show your gratitude in other ways. 3. Use a credit card or a personal loan. If you have a credit card or a personal loan, you may be able to use them to cover your emergency expenses. While they are not free of interest or fees, they are usually much cheaper than payday loans. According to themuse.com, the average credit card APR in 2020 was 16.61%, and the average personal loan APR was 9.65%. That means you would pay much less interest on a credit card or a personal loan than on a payday loan. However, you should only use this option if you are confident that you can pay back the balance in full or in installments within a reasonable time frame. 4. Seek professional advice. If you are struggling with debt or financial issues, you may benefit from seeking professional advice. You can contact a nonprofit credit counseling agency, such as the National Foundation for Credit Counseling, that can provide you with free or low-cost counseling and education. They can help you review your financial situation, create a budget, negotiate with your creditors, and set up a debt management plan. You can also consult a financial planner, a lawyer, or a bankruptcy trustee, depending on your needs and goals. Payday loans are not the only way to deal with financial emergencies. They can be very risky and costly, and they can harm your financial health and well-being. By following these tips, you can avoid falling into the payday loan trap and find better solutions for your financial problems. Thank you for watching. Let me know what you think about it, and please leave a comment below.